Alright guys, in this video I'm going to be going over the difference between high resistance liquidity and low resistance liquidity and where to put your stop loss and where to put your TP and all of that, right? So I'm going to go over here. So I have this board created that basically explains what high resistance liquidity is, right? So high resistance liquidity is liquidity, so orders that price doesn't want to fill. So it's resisting that liquidity. Now, why exactly is like price resisting that liquidity? Why does it not want to reach those points, those orders? Many confluences or reasons preventing price from coming back up: fair value gaps, inverse fair value gaps, draws on liquidity, and SMTs. So what is it good for? Stop losses and secure spot. Basically, what a high resistance drawn liquidity is a drawn liquidity, right? A high or low that is hard for price to retrace to. Why is it a difficult spot? Because it is protected by multiple opposing confluences, and if like the markets are in a sell order, if there's a high that is a high resistance draw, that high should not get visited again because it is high resistance, right? So this might be a little confusing for you right now, but I'm going to dive into an example. And I didn't even plan on making this video, to be honest. I literally was backtesting and then I realized what a good opportunity it was. But I basically took this trade and I wanted to kind of explain it to you guys, right? So I'm pretty sure we had like a 1 hour bearish fair value gap right here, and then we had this high that we never reswept, but we had this SMT here with ES. So this is NASDAQ, as you guys can see. We swept this high, and then my bad, I have to open TradingView for this, but on the 8th I know that we right here we didn't sweep it on ES, right? I don't have it on here, I don't know why, but we had this liquidity sweep, right? So liquidity sweep, SMT, tap into a 1 hour bearish fair value gap. We're looking really good right now. Now what we need to see is a confirmation highest time frame inverse fair value gap. As you guys can see, 1 minute that we formed right at market open. After we get this inverse, put your TP back to these draws on liquidity and the bottom of a 5-minute opening gap, or a 5-minute bullish fair value gap. Now what this basically means, right? I'm not going to dive so much into the trade, but I'm going to dive where I put my stop loss here, okay? So the reason, if you guys zoom in, I didn't put my stop loss like on this high, and instead I put it on this like intermediate high. I'll tell you guys why, right? So my overall bias was definitely correct. I saw where price wanted to go. I knew that price wanted to go and displace down through these lows, okay? Because I knew that, I needed to find a spot where to put my stop loss so I wouldn't lose money because of my bias being correct. So I put my stop loss here because, first of all, I knew that this is a strong drawn liquidity, a high resistance drawn liquidity. This high right here, okay, first of all, this high for sure shouldn't get revisited. I knew for a fact. Now you guys might be asking, well, why didn't you just put your stop loss here? Okay, first of all, bad RR trade. I don't take bad RR trades. I have to take at least a 1 RR. And I knew that this was a high resistance drawn liquidity because we were in the sell model. Price should not revisit. We should not take out this high and then continue lower. There's no point for that. There's no point for that, because if price were to come out and fill these orders here, price should then at least, it's just going to come up here, take out these orders, meaning that my bias was incorrect, right? And if my bias was incorrect, then I don't want to be in this trade, and I want to have a tight stop loss to minimize my losers. All right, so why didn't I put my stop loss here? Well, this high pretty much means nothing. Well, now you're like, why would this high mean nothing? And why would this high mean something? How am I going to be able to tell apart? Like, what is going to, like, I can't see that. But pretty much, right, another helpful thing is a lot of times when you see this like a strong momentum candle with that follows the bias, like the general direction of the higher time frames, price almost usually never retraces back to the open of that candle. Like if we go here, if I put my stop here, I'm pretty sure it matches up exactly. Yeah, it literally matches up where I put the high. And that's something that's going to come with time. I know that you guys probably won't be able to notice this now, and that's just a smaller thing. But another thing, why this high was unimportant. Why would I be comfortable risking money and saying that this high wouldn't get revisited again, right? Because how I explained, it shouldn't come here. But if we were to revisit this high here, this low resistance drawn liquidity, price still could retrace into this order block. We still took out like the equilibrium on the range, and we could have not continued lower, right? Because we could have not continued lower, but I didn't see that happening because all of the higher time frames were aligning bearish. We had confirmation on basically every single time frame. We had everything that we needed to do, and I just knew that price wasn't gonna retrace back up here. Like, this is another intuition thing. Like, I can't like tell you exactly why, but I'm gonna try my best, right? A lot of people aren't gonna attempt it, but not me. I'm gonna tell you guys exactly why I feel like it is. And yeah, it's just a high resistance draw, but now I'm gonna draw over here and I'm gonna come and show you guys what this would look like for the upside. Where to put your stop loss and where not to put your stop loss, right? So let's say we make this low or whatever. We make this low and then we form this high to come back in here. We like sweep the low, create like an SMT, go lower, and then get a confirmation, okay? So initial liquidity sweep, SMT here, let's just say, for example, and then we get a confirmation by this, and then we get a change in state of delivery here, like you enter. Now what you're not supposed to do, and this has cooked me multiple times, like this is like stop because of this one thing, it's stopped me out so many times, right? So in this diagram it might not be perfect, but no, actually, yeah, it's still a trade, right? So before I used to be greedy and I was like, I want to take the best possible trade. Like, I don't want to go down and draw down. I want to like top take this every single time. And that is good for some people, but for the strategy that I use, for that Nick uses, that we teach, and that is very, very profitable, you take the highest probability trade, not the best, like lowest stop loss trade. And the reason for that is if you put your stop loss here, even though we have this like inverse for value gap here that will hold, if it doesn't hold, you still have like an order block potentially here. And if you were going to use this low and say that this low is part of an SMT, you were going to say that this low should be protected, because if this is part of an SMT and if price is going to continue higher into your bias, then price shouldn't come back down. It shouldn't retake out this low and fill more orders lower. This low right here would be a high resistance draw on liquidity, because it is hard for price to fill it, because ES, I'll just say, I'm just gonna put ES in like black. So ES didn't take out this low. Let's say it did something like this and continue higher. This range right here shouldn't get revisited. Yeah, this fair value gap could, but this low is protected. That's why you want to put your stop loss on the bottom of the low, not the bottom of the fair value gap. Because also, if it is a fair value gap, a lot of times price is gonna like wick it and not close on the like beneath the fair value gap. Like, so the fair value gap isn't invalidated, it just fills orders that way, right? Now this is an example of what to do, right? Put your stop loss beneath a high resistance draw on liquidity so that it is like improbable for it to get hit. Now I'm gonna show you guys, right? I showed you what high resistance liquidity is, what a bearish model is, what a bullish model is. Now I'm gonna go over like low resistance liquidity and where to put your TP. Why would you want to put your TP where low resistance liquidity is? Because it's liquidity that is likely to get hit, that nothing is really holding it, nothing is holding price back to fill those orders. And that's why you want to have your TP, because it is probable. It is a very probable, like likable draw of interest for price, right? All right, so let me just stop this and I'll come back in a minute. All right, now I'm going to be going over the points of low resistance liquidity, right? So what it actually is, what it means, and how you can use it, right? So if we scroll over here, low resistance liquidity is liquidity that is easily hit, orders are filled. Why? Nothing protecting it. High frames agree with the trend, right? So if it's an uptrend, you're going to be targeting your highs. If it's a downtrend, it's going to be targeting lows. This is where you want to put your TP, easily hit, right? So now let's go over to here. Let's say we have this model, right? We have a liquidity sweep here, and let's just say we have an SMT with ES, and right, we talked about how you want to put your stop loss below this low right here, because it is a protected low. It's a high time frame or high resistance draw on liquidity, right? Now we're gonna be talking about this high, because we are in this buy model buy everything is agreeing that we are going to go up. Why? We have a liquidity sweep, we have a SMT, we have confirmation right here, and we have this unfilled like high. Let's say we have like whatever, we have anything above, right? So every like time frame, or just in this model particularly, we're looking very bullish. Now when we're looking very bullish, price is going to target highs, because when you're buying, like let's say you buy at a low, like you buy at a low, you want to sell at a high. That's why we're targeting highs to sell and then reverse off of it, right? So in this like model, you want to put your TP here. Why? Because we have already proven that our bias is correct as of right now. We have proven that our confirmation is there. And let's say if I go back, oh, I erased it. But if we go back, like we want to be targeting this high, because it is like most likely where price is going to go. It's a high point of liquidity. Usually during New York session, it's going to primarily target Asia and London session highs or session lows. And this is where you want to be putting your TP. I mean, I think this is a lot easier than high resistance draws on liquidity, because this is pretty much like a high or a low, and it's just easier to get hit. I think that harder, like the harder points are like strong resistance draws on liquidity. My bad, guys. I can't even talk right now, but I hope that this concept makes a lot more sense, because I feel like a lot of you guys have already been using this. You guys just haven't been paying too much attention to it, and I would get why, because I remember when I started, I was like, it's just a high, and I just thought all highs are created equal. They're not. Some are more powerful than others, right? In the liquidity video, Nick talked about like session, like liquidity draws, data highs, data lows, all of that stuff. So make sure you guys go watch that if you need help with just figuring out the liquidity. But I feel like this is pretty much a lot more simpler and a lot more common. So yeah, this is where you should be putting your TPs in general, because there's nothing protecting it. It should get hit. And yeah, that's about it. And yeah, I hope this video explained a lot of stuff for you guys, especially if you were having trouble or you guys were getting wicked out every trade and stuff like that. So yeah, let me know if you guys have any questions about these things, about where to put your stop loss TP, because I think this video pretty much explained all of it. But if not, yeah, let me know, and peace out.